external audit and anyone else listening in via the online webcast. Please can I remind members after speaking to turn your microphone off for the benefit of those watching on the online webcast. Welcome and apologies. David, have we any apologies?
Apologies for Councillor Powell and Councillor West, but Councillor Chatfield is substituted for Councillor West for this.
Okay, thank you very much. Item number 2, minutes, which are pages 5 to 10 in your pack. This is to confirm the minutes of the Audit and Risk Committee held on the 18th of July 2024. I'll propose approval of these minutes from the Chair. Do I have a seconder, please? Thank you, Councillor Corby. All those in agreement?
It's carried.
Thank you. And one abstention. Yeah, thank you. Declarations of interest. In accordance with the regulations, members are invited to declare any disclosable interests under the Code of Conduct and the nature of those interests in respect of items on this agenda, and or indicate if Section 106 of the Local Government Finance Act 1992 applies to them. Are there any declarations of interest this evening? No? Thank you. Item 4, petitions, deputations and questions. To receive petitions, deputations and questions received from members of the public in accordance with provisions of Procedure Rules 93 and 94. David, do we have any?
None received, Chair.
Okay, thank you. Questions with notice from members. To consider any questions received from members in the Council in accordance with the provisions of Procedure Rule 27.
None received also, Chair.
Thank you. Notice of motion.
None received, Chair.
Thank you. That brings us on to item number 7, completion of the statement of accounts. And I think we're going to receive report number 1066, 2024 from Kirsty. Thank you.
Thank you, Chair. And tonight we have Andrew Merry, the Council's Head of Finance, as well for the report in case you have more detailed questions as well. And we were expecting Helen and Siobhan from Grant Thornton to be on virtually. Oh, look at that. If only I had that power normally. It is a busy time of the year, especially for Grant Thornton and external auditors generally, which we'll touch upon in the report. So as you'll remember from our last meeting a few months ago, we had hoped at this September meeting that we would be presenting you with the final statement of accounts, but it's an update rather than that completion statement. The teams have worked extremely hard, both the Council's finance team and other officers as well across the Council, as well as Grant Thornton as well, really trying to chase that end of September deadline as we laid out previously. We're really close, but we're not quite there in terms of some of the audit queries that need to be resolved. There is a slight amendment as well to our practices in regards to the value for money opinion that Grant Thornton are required as well. So that should come as part of the bundle for the statement of accounts, but they have let us know that that is going to be delayed until the 31st of December. So the whole package of the statement of accounts is unlikely to be fully completed until then. So going through the report, 2.3 outlines the background. So again, it references what should be done and the timescales involved in the steps that we go through. It's always useful to put this into the report, not least because in recent years we have been some way away from this process. And as mentioned, we were hoping to get back in line, and to a large degree we are. It's the same calendar year at least. 2.4 shows the activity on the audit. So you can see the number of queries that have been raised and which parts of the statement of accounts in particular, where those bulk of those audit queries have been raised, and the amount of audit evidence that the finance team in particular have provided. So we've just got there under 300 files of evidence and working papers for our statement of accounts. So it gives you a flavour of the volume that the teams have been working through. 2.4.2 is an update from Grant Thornton as at the 16th of September. and it notes some of the classic areas in terms of completing a piece of the statement of accounts piece of work with the valuers and pensions. That's where estimates are generally made, and the value on our balance sheet tends to be significant as well. So it's not unusual in terms of the risk and the value for these areas to be looked at, and work is continuing on some of those areas. The pensions one in particular is an interesting one. It's being caught up in some national challenge. Local government has, in many cases, when the actuaries do their estimates, has turned into a surplus on our pension fund, and therefore we have to do extra checks on our pension fund and estimates to make sure we're not overestimating it. And so we've done some additional work looking at net present values of those cash flows involved in the pension fund, and it did actually, when we calculated it on that basis, it did turn it back into a liability. So there was a moment there where contributions were leading to assets on pensions. We're not unusual in this regard. That is a national point, so much so that our accounting body SITFA issued further guidance to help all councils as well in this particular area. And Helen may allude to it, Helen and Siobhan may allude to it, the auditors at a national level as well are particularly looking at this because of that change in accounting estimates. The new piece of work you'll be aware of in terms of auditing in the IT arena as well, so there's some enhancements to the audits. That's taken us a little longer to do. We've had some, in both teams, there have been some absences that have delayed that, and the value for money work as well. 2.5 of the paper provides an update on the national delays as well, and we have some recently announced backstop dates and the implications with regards to disclaimers as well. So that would ultimately, those councils where these backstops will likely be implemented will cause additional and different work. We are hoping not to be part of those backstop dates. We're working really hard, as mentioned, to get these accounts done, certainly by the end of the year, and so not hitting that February deadline. And I will pause there for questions, and if Grant Thornton would like to say anything at this point.
Grant Thornton, would you like to add anything to that, please?
Yeah, good evening, everybody, and yes, apologies for not being in there in person. So I think there's very little I wanted to add to that. I think, as Kirsty alluded to, the audit continues to progress. We've made good progress recently, because of the sort of length of time for us to get to the previous year's opinion. Things were running slightly behind where we wanted that to be. Although that said, we continue to make good progress around 23, 2024. There remain some queries to be resolved, but we are looking to do that as soon as possible, and should be on course to enable to bring the AFR to the next meeting. I don't think there's much else that I'd want to add other than to echo sort of Kirsty's comments, really.
Okay, thank you. Committee, Councillor Payne.
Thank you, Chair. It sounds that we're going in the right direction. That's the advantage of having been on this committee just a little while. Okay, are we going in the right direction as quickly enough, or, and if not, is there anything we can do to speed the process up?
Yeah, really good question. Yes, absolutely. Are we going in the right direction? Yes, it feels much more akin to the way that the audit should progress, and the work around it. So absolutely, it feels a lot better, and the team has certainly been pulling out the stops in terms of hitting those deadlines. Can we do anything more? I think it does feel like there's a bit of a buffer limit that we're hitting in terms of just the volume of work. Certainly the audit requirements have increased over the period as well. So, and that has been recognised going forward in terms of enabling councils longer to prepare the accounts in future years. But generally it feels that we're getting back on track. Helen alluded there, some of the delays that we've potentially incurred are because of the hang-ups from previous year's delays, so that potentially is still running out. But it does feel more comfortable. I don't know if, Andrew, you've got further experience operationally.
Not much more to add. I think we've returned to partially on-site audits as well, and that's helping to clear down some of the audit queries a bit quicker rather than going backwards and forwards on email. So we're on site at least once a week with the auditors in the minute. So certainly that change in arrangements is helping get through some of the more tricky where it's easier to have a conversation with somebody rather than go backwards and forwards on email or even Teams. So we are. I think we're doing as much as we can to address the issues and clear the audit as quickly as possible.
Councillor Sonia Ball.
Thank you, Chair. Yeah, I'm obviously a novice on this committee. So is this has this happened in previous years? I sort of picked up from what you mentioned. So this is not out of the ordinary, or is it?
Carry on.
Thank you, Chair. It's not out of the ordinary. So at previous years, I think at least the last two, there has been significant delays. You know, where we've had multiple years of statement of accounts open at the same time. Every month, every day, hour, that those statement of accounts are left open. We have to recheck our assumptions. We potentially have to restate our balance sheets. Creates an awful lot of additional work. This time we're only concentrating on one. So I would say the previous at least 2 years have been unusual. This feels very much back on track in that regard.
Councillor Ross.
Can I ask two questions? The first one relates to staffing. I was looking at the number of queries raised. Are you under pressure because of the current staffing in finance? Thank you. That's the first question.
Are we under pressure? Absolutely. I think in terms of the whole remit that finance are involved with. So with the financial sustainability that we're looking at, the constant reductions in funding, you know, that's another aspect that finance has to deal with. So whilst the audit feels a bit more routine, although the audit requirements are becoming more, there is pressure. There's a pressure to balance it all because budget now feels like all year round. Audit in the past has been all year round, whereas before they were quite yearly cycles, which helped us manage the workloads.
Discreet. I'll come back to that theme later. The second question is, I'd like to understand a little bit more about the pension scheme. My understanding is that it's part of the Leicestershire scheme, and presumably we have triennial actuarial valuations, and there will be issues around the rate of return that's assumed, the rate of inflation, and the longevity and profile of the membership. Why is there? You're a discrete section of the Leicestershire pension scheme. Can we get some, not at this meeting, but can we get some indication of the work that is entailed, not necessarily when there is an actuarial valuation, but in any normal year for the pension scheme as part of our audit fee? Thank you.
Thank you, Chair. Yes, we can certainly look at the information that we get from the actuary, so that might be a good place for us to start. So, you know, they very much give us a report on the assumptions that they've made. They also provide like a user guide to it, so it breaks down some of the terminology and assumptions behind it, behind the report as well. So that might be a good place that we could start as well. But absolutely, as you said, we are part of the Leicestershire pension scheme. They do tend to be run by the shires generally, and with admitted bodies there underneath. It is one where we can identify our assets and liabilities. So, you know, rather than as a whole. It's not always the case with government pensions, so for teachers and nurses, for example. So they are able to look at our age profile, for example, and a bit more detailed. So whilst we're in the same scheme, we don't all have the same assumptions applied to, like you said, longevity, age profiles, etc.
Sorry, Councillor Ross, is the question why is there so much administration attached to it?
No, the question is
Yeah.
how much audit time
Yeah.
is actually devoted to the exercise?
Thank you. It varies. It varies. So significant in terms of the value on our balance sheet. So that will always gain greater attention. The fact that it is an estimate. You know, based on different assumptions, it's relatively subjective in some cases, but we employ experts. Therefore, it's not just Andrew and I looking at that. And then, as mentioned, there's a particular accounting rule that we've had to apply this year. So again, it's taken up extra work this time because of the nature of the changes that have occurred on the valuation. So I would argue pensions has probably taken up more time this year, a few nods, than previous.
Thank you. The question relates to the fact that it is a pooled scheme, and therefore how the costs are apportioned. Thank you.
Okay, thank you. Any more questions from the committee? No. Question for Andrew and Grant Thornton, really. How confident are we that we'll get it wrapped up before December?
I'm fairly confident if we continue working the way we are. There's no reason why we shouldn't. As you can see, the number of outstanding queries are decreasing every week. We can see that coming through in terms of the tracker and the workload of the teams. So as long as we continue to work and there's no buildings don't burn down, those types of things that mean we have to open our account, touch wood, we should be fine. So if we carry on working the way we are, there's no reason why we wouldn't be able to hit that December deadline. In actual fact, I'd hope the audit was concluded long before December in terms of the substantial testing of the audit, not the finalisation of bringing them here.
Okay, thank you, Andrew. And for Grant Thornton, please.
Yeah, I think I absolutely echo Andrew's comments. I'd be reasonably confident that we can get it all wrapped up in December. We are planning to complete the field work, as Andrew says, well before that. And the way that the audit teams are and the finance team are working together and clearing those queries should enable us to do that. So yes, I'm going with reasonably confident, which, as you all know, for an auditor, that's a pretty positive statement for me to make.
Okay, thank you very much. Any more questions, committee? No. Okay, so both these recommendations are for noting, so there's no vote required. But the recommendations are, number one, notes the process for the statement of accounts from publishing the draft document to external audit and reporting to those charged with governance. Notes the continued external audit delays experienced locally and nationally and resulting impact on the council's position. Okay, thank you. That moves us on next to a verbal update on item number 8 for the strategic risk register. I think Kirsty's doing that on behalf of the monitoring officer who's I think on holiday. Thank you. Okay, Grant Thornton, thank you very much for attending. You're free to leave if you want to. You're happy to. We're happy for you to stay if you want to too. Thanks.
Yeah, thank you. Thank you.
Thank you.
Thanks.
Thank you, Chair. So indeed, I have some points that provided to me from Angela, our monitoring officer, with regards to an update for the risk register. So apologies if it sounds like I'm reading out, but I am in that regard to make sure I cover everything. So the first thing to say that there has been a process, and we're still going through the process of refining the policy and framework adopted by Cabinet on the 5th of April 2022. That original document very much provides a strong foundation and remains broadly fit for purpose. but there are some enhancements that Angela and the team have spotted in terms of improving the way that we look at our risks and manage them as well as reporting them. So the intention is to take a report to Cabinet in December. Some of the changes are administrative housekeeping, such as a change in the responsibility from myself to Strategic Director for Law and Governance. And other respects, we'll be asking Cabinet for a revised policy and framework. And for example, there are she's given me 6 areas that we'll be looking to change. So we currently talk about the strategic risk register, but Angela recognises that it's more accurate to describe it as a corporate risk register, because then it incorporates not only those risks identified as strategic, but those operational risks that have significant potential ramifications. So broadening that definition to help us manage the risks. The format will be amended as well to rationalise the corporate risk register and host each element, including our risks on a page, and it will be done via Excel. At the moment, we use Excel and Word, so there is the potential for there to be gaps between the two. By moving to this host system as well, we'll be providing greater guidance to those completing any part of the risk register. So we'll get components, parts will talk to each other, and enabling us to aggregate risks appearing in multiple locations, which in isolation might appear low, but through aggregation we can escalate to the corporate risk register. So a bit more visibility as an overall piece. Our risk register, or our risk assessment tool will be refreshed to replace the static timescale metric with a fluid urgency metric. We'll also include part of the register a column capturing opportunities that arise with a particular risk as well. So there may be, and she's put prize, but we may be able to lock benefits as well from that risk management, because we're aware of the risk and we're putting in mitigation measures. Also aiming to use word clouds so that we can bring the risk register to life and see what's being reported on to a greater degree, and it helps for the data to then tell us the story of the organisation. So further data analysis on our risks being registered. And the refined risk management policy and framework will form a part of a holistic approach. So we'll also be looking at the risks that we identify as part of the corporate strategy, the financial strategy, corporate performance, corporate risk management. So they're all neatly joined up together.
Thank you, Kirsty. Committee, have you got any questions? Councillor Payne?
You know that risk is one of those words that causes me to have a certain Pavlovian response. If the budget, suddenly we had extra demands placed on it from, say, social care is an obvious example, which seems to be happening, would that come under risk? Are we putting that down as part of the risk that we need to deal with?
Yep, absolutely. It is very much where, especially with top tier authorities where we have social care, there is that particular risk on adult social care and children's in particular, because of the cost of some packages and what care somebody might need. So it absolutely is an identified risk in terms of the financials. There is a financial risk table as part of the NTFS, and that forms part of that. One of the mitigations that we have is making sure we've got adequate reserves, for example, so we have the risk reserve specifically set up for items like that, which will cover. And there is some part of that risk as well with regards to financials, is making sure our budget estimates are robust, so that we have got the budgets in the right places as well. So it is inherent in the way that we put budgets together. But specific, your element there on demand, to some degree it will be covered in the risk reserve for that immediate, and then it will enable us time to put in mitigating measures to reduce those costs or spread our budget and priorities differently.
But the reality is, if we take social care, that there's an element of guesstimate going on here, isn't there? Because no one really knows where the social care costs are going to go, except everybody knows they're going to go up. That's the only constant we've got there. And since we, like every other council, are working on using reserves and trying desperately to balance our budget, it seems to me that we need to keep a special eye on costs like social care. Otherwise, we could get caught out very quickly, it seems to me.
Yep, there is a risk. It's not quite. I would argue it's not as quite clean cut as one day there's no risk and then the next day there is. There is regular check-in of our demand levels and demographics. So when we set the budget, we consider such factors and we make estimates accordingly based on past practice, what's happening across the nation as well. So we do build that into our estimates. And then that potentially gives us different profiles of spend. So if we have to spend more in adult social care, for example, then other parts of the council's budget have to be reduced accordingly. So it's not a bottomless pit. We only have finite resources and we have to manage accordingly. Some parts of the other mitigations will be looking at our regular monthly monitoring reports. So again, we would be noting any uptick in terms of demand that's being placed on the budgets, and again mitigating actions will be put in place, so we'll have to not spend in other places, we'll have to turn off the taps. We won't be able to deliver like we thought we would on some of our priorities because we've got demands coming elsewhere. So whilst the budget is set yearly, we have to manage it as we work throughout the year, and we had to change our plans accordingly. So hopefully that gives you a bit more assurance in terms of how we would deal with demand, not just absorb it. We have to look and actively manage it, both within the, say if it was social care directorate, but across the council as well has to shoulder that responsibility as well.
I'm not sure you've given me assurance, but I understand that you clearly understand the nature of the problem. What I fear is that we have certain statutory obligations. So when you talk about moving funds around because of sudden growth, if we have a lot of growth in a number of areas which are statutory, our room for manoeuvre is going to be extremely limited.
Could I think Kirsty's update from Angela was the fact that we're revising the way that we view and manage risk within RCC. And I think we're making it more holistic. We're pulling different threads together so that we have a better handle on truly what's going on in the organisation, and we'll have a better visibility. So I think from where we are now, we're going to have something that is much improved from what I'm hearing, that will allow us a more dynamic view and a more in-depth view of what's going on. So therefore we should have a better handle on how we manage it. Is that a fair summary? That's what I'm hearing. Yeah. Yeah. Well, so do I. But my committee, has anybody else got any more questions before I pitch in? No. I just wanted to say that this committee does need to see whatever the outcome is or whatever the output is in December, because I think it's overdue. It was due this meeting. So if we can make sure we do deliver in December, please. And is it in the forward plan to go to cabinet? Do we know? Yeah. The risk report that Kirsty's just asked to go in front of cabinet in December. Perhaps we could just check it. Yeah, thank you. Okay, shall we move on? Yep. Number 9 is the Treasury Management mid-year update. And again, this is report number 105, 2024, from Kirsty again.
Thank you, Chair. So you'll remember, just having a quick scan, there was some audit committee training from our Treasury experts link provided, I think, last year. Some members were on that training, so we might have a mix.
But I think we might need to do a refresher. Yeah.
So this is and again, I'd look to Andrew, but it's certainly in my time here, it's the first time the committee has looked at treasury management indicators since I've been in post, at least. And it was something that we identified, especially during our MTFS, when we put together our medium-term financial strategy, that it's good and sound practice for our treasury management indicators to be looked at by this committee in particular, and in consideration with the risk that it poses. So as a bit of background, each year the council we put forward a treasury management strategy, and it forms part of the budget papers. So when we're talking about treasury management, it is that cash flow for the council, looking at investment criteria, and also looking at what borrowing we would need for any capital assets as well. So Andrew and I do not make this up on a daily basis. There are a set of rules that we've got council to approve, and therefore you can assess at that point how our risk is being managed. In essence, these are called the prudential indicators, and you'll see at 2.1 it does underpin the system of capital financing. Early in my career, the way that councils used to look at capital was very much you've got an allowance from government, so in a way they were controlling the amounts that councils in particular borrowed. That moved to a system called the prudential system, whereby councils could decide themselves how much to borrow, how much to invest in assets, and therefore a series of prudential indicators came about. Councils can only borrow for capital purposes, so that's with regards to investment in assets, not for revenue purposes, so it's a cardinal rule. So as part of those prudential indicators that we set, they are set to make sure that our capital investment plans are affordable, so we're investing in the right assets for the right reasons, that all our external borrowing and long-term liabilities are prudent, so looking at our debt levels and the rates that may be attached to them, and also looking at the risk of any treasury management decisions, so what institutions we'll invest any surplus cash with as well. So there are rules around credit ratings, and for us as well, what nationalities the banks may be with as well. So you remember Iceland springs to mind. Oh, yes. So they're all covered in the treasury management strategies. The report gives a flavour at 2.3 of 52 million of investment that we've had, and you'll see there that the spread between banks and local authorities where we've invested. 2.4 mentions the borrowing of 21 million, just over 21 million. We have no new borrowing plan to fund our capital programme. All those rates are fixed. The one area where we could look to improve, and indeed Andrew and I are, is looking at the maturity profile, so spreading the risk of when those loans mature. Ideally, we'd be looking for a flatter profile, so you're managing the same amount of debt maturing each year. Looking at our debt profile, there is a lot in between the years 2051 and 2055. So rates have prohibited us looking at those. We'd be incurring significant penalties of early redemption, but now rates have changed. That opens up some possibilities of flattening out that maturity profile. In terms of the prudential indicators which are in the appendix, we're in line with all of those performances, in line with all of those set as well. So there is nothing to report other than that we're in line with our estimates and what we planned.
Thank you, Kirsty. Committee. Councillor Ross.
Just going to say, I think you do. It's a very comforting report. Thank you.
Thanks. Anybody else? I've just got one small comment, but yes, I agree it is a comforting report. I'm looking at the credit risk 3 and the mitigation. I've just got memories of it makes a comment that about banks and financial institutions and how we ensure we're satisfied with their credit rating, etc. And put limits on values, etc. I just remember Thurrock and us making a deposit with Thurrock, and I think there should be some acknowledgement, because we have got money with other authorities, in the mitigation that we also do due diligence on the local authority as well. I think that's just a comment that might be helpful. Thank you.
Thank you, Chair. It's a really good point, and actually we do have we're accountants, so I'm bound to say this. We do have a spreadsheet that does analyse other councils' balance sheets as well, and the level of debt outstanding. So, whilst in theory, no council can go bankrupt in that it's underwritten by government, we do indeed bear in mind the performance of the other councils' balance sheets. And Andrew looks poised because you actually make those decisions as well.
So our treasury management strategy sets out the checks that we do on local authorities before we invest as well. So, for instance, we don't invest with local authorities that are already subject to central government intervention. We do look at their balance sheets before we invest to make sure have they got any underlying issues. So, you know, before we make any investments, because, you know, basically we look at rates and risk the risk associated with those rates. So if local authorities are generally paying more, it's not than what a bank would. It's normally because they have to, because they're a much more riskier organisation. So we do undertake checks as part of any investment we do.
Just be good to reflect that in that mitigation. Thanks. Councillor Payne.
Yes, because the sad truth is that whole sector, the sector we're in here, has gone from being regarded as blue chip solid, say put the money in there, to a much more volatile and risky, which is a real sad reflection on where we're all at in local government these days. I remember as an Essex boy saying to a finance officer here, for God's sake, don't put any money in Thurrock, because nobody in Essex puts any money in Thurrock, you know. But so you know, local reputations can sometimes be worth pegging into.
Any more?
No, that's it.
Okay, thank you very much. This is another report for noting, and the recommendation is it's recommended that the committee review the current performance against the prudential indicators as approved in the Treasury Management Strategy, as contained in the Integrated Budget Plan and the Medium-Term Financial Strategy. The prudential indicators are shown in Appendix 1. That's the recommendation, and there's no vote. So we will move on to number 10, which is the Internal Audit Progress Update Report number 104/2024 from Rachel, please. Thank you.
Thank you, Chair. So this is the latest update on the delivery of this year's internal audit plan. So I'll just talk members of the committee briefly through the key sections, and I'll be happy to take any questions. So the appendix provides a full copy of the progress report from page 15 of your papers this evening. So page 17 provides you with a copy of this year's audit plan, and it lists out all of the assignments we are due to deliver and the status of each of those as at the time of producing this progress update for you. We have had a further 2 reports that have been finalised since this was produced. Obviously, we continue to work on it, and this is at a single point in time, and all of those are now available for members of the Audit Committee in the usual way, and will also be obviously included in further updates during the rest of the year. So since the last Audit Committee update, we have finalised a further 2 reports as at the time of producing this. As I say, further reports have been completed since. So those are in relation to the local taxation scheme, where we're looking at council tax and business rates administration and continuing care for children. So members of the committee may recall that last year we looked at an audit of continuing healthcare for adults, which resulted in a limited assurance opinion. So on that basis, we wanted to look at the equivalent in children's services. So we've conducted that review, and as you can see within the report, we have given a level of moderate assurance because we were happy that there was a better control environment in place than we initially found in the equivalent area with adults. But there were still recommendations and actions to be taken forward, so we'll continue to follow those up as we would usually with any of the audits. So also within the report is an update on the implementation of audit actions. So on page 22, Appendix B, you have an overview of actions arising from audits and the implementation of those by service areas. So we've been able to conclude that 13 actions were implemented within the last period. 2 of those were high priority. We do have an increase in the number of overdue recommendations since the last progress report, which is now standing at 19. 12 of those are within the last 3 months they became due for implementation, and 7 are now over 3 months overdue. So any that fall into that dreaded category of being high priority and over 3 months overdue, I always provide full details for the Audit and Risk Committee. So you have full details of those 2 actions in Appendix C on page 23 of your papers this evening as well, with the latest status update that we've been provided from the service area. As you can see, both of those relating to information governance. So also within the report is an update on feedback that we've received on the audits that have been delivered in Appendix D on page 24, which is all positive, and I'm really pleased to see the majority of those are rating the work as outstanding. So other than that, I'm happy to take any questions, Chair, on the detail within the report, and thank you.
Committee. Councillor Ross.
I've got a couple of questions. I'm not sure if it's actually directed, the first one is actually directed at internal audit. It's a question about the ability to turn around management letter recommendations and this business of staffing. And I think one of the points is also about, there's a comment about IT controls and staffing in there as well. Have we got a staffing problem in our organisation?
Councillor Johnson, could you have a go at that one?
I can have a go at it. If you look at the website, you'll find I think there are 10 jobs currently being advertised. I mean, the council's under pressure, not surprisingly, in terms of costs, but that doesn't mean we've got a staffing problem. We have had high turnaround, but we're now moving into a better area with that. The fact that we're only recruiting or advertising 10 jobs, I think, is a good sign rather than a bad sign. Because it was higher than that, my understanding from talking to a few people about this is that rumours of staffing issues are running ahead of the actual figures, as in there are more rumours than there are actuality. No.
No, the question is really about the pressure on staff and therefore the ability to effectively process work. The second question was about on page 3 on the adult social care report, page 3, and there's a comment about only one business information officer creates the lack of resilience in the team. So my question on that would be, given the size of the organisation that we have the smallest council in Britain. What remedial action would you actually propose?
So, through you, Chair, I think obviously all we can do is highlight where the risk and where the control is not in place that we would expect to be to manage that risk. We highlight that. Obviously, it's for management to identify what the action is, and that is why when we feed back at the end of an audit, we go through, and we have had this in previous audits where there's actually been a really good policy or a really good control, but simply nobody there to implement it because it's been reliant on a single individual who hasn't been available. So it is an unusual situation. It's one of those that we do have to deal with, but it's really for officers and the management within that service area to identify how they will manage the risk in those circumstances. And we are happy to work with them as to different ways that can be managed, and it may be that there's alternative models available, but ultimately all we can say is that there is a risk exposed until it's addressed. I hope that helps.
And I accept that, having written exactly the same things 40 odd years ago. So I accept that, but it's a reasonable point to make about the size of the organisation. On pages 5 and 6, client-led data, there's a recommendation. Surely NHS would advise non-receipt as a flagged event versus confirmation of a receipt of documentation. Surely that's actually what you should actually be looking for. And then on page 6, the East Mids ADASSD, which appears to be a transcription error and an assumption problem, and therefore the recommendation is that this is a systems change could actually solve the issue, and I believe that is in your recommendations. And I'll shut up at that. Thank you.
Sorry, this isn't in the pack, is it? It's a separate audit.
So through you, Chair, I think this is from the individual audit report, which
Yeah,
obviously
right,
members
okay,
of the audit
right.
committee have access to,
Yeah.
but it's not summarised within the papers.
Sorry, I was looking.
Yes.
Couldn't find it in my papers.
I didn't realise I wasn't supposed to read that, but
No, you're absolutely meant to read it. If the committee has any concerns about any of these audits, we can always invite the relevant director to come and talk to us, if that's a requirement. It's only usually for pretty poor audits, to be honest.
I accept that point, and I'm not suggesting that they're serious. It's more the recommendations and the actions on them, and how they recognise the size of the organisation and the ability to have backup, for example, within the organisation. It's so here's a recommendation. So what can I actually do with it? Thank you, and that's the end of my screed.
Any more? Councillor Corby.
Yeah, this is actually a question on behalf of Councillor Powell, who's not here tonight, and I just agree with her. It's on Appendix C with relation to the information asset register, only 86% completion. Not really happy that there's been the reminders, and she's asking whether there'd be a bit more firm resolve about getting this information in through managers. It's one of those little sticky ones there. And also, members, just the same above, 13 of 27 have completed GDPR training. To those that have, so we should do. To those that haven't, can we get something else out to get these figures up?
I think this has been on here for a little while, so I think I shall drop a note to the leader and request her help in resolving the GDPR issue, certainly. I think also, Andrew, a little while ago, sorry, Councillor Johnson, a little while ago we did enlist your help, and it did have an impact where there was some focus at your joint management meetings on the closure of these issues. And I wonder if we can enlist your help again, please, in establishing some focus on closure.
Yep, I'll reissue the pressure notes that I sent.
Thank you. And then there's an action for me as well to write to the leader, and probably on this other one for the information asset register as well. Okay, is that okay? Any more from the committee, please, on this report? No? Thank you very much. The recommendation here is that the committee notes the internal audit update report, Appendix A. The next item is number 11, any other urgent business, and I've not been notified of any other urgent business. Therefore, number 12 is the date of the next meeting, which is Tuesday the 10th of December. And just to remind the committee, there was also some training on October the 8th. Thank you. And it will be done by Teams, so you don't have to travel anywhere. Okay, so I therefore close the meeting at 19:49. Thank you very much, everybody.